Welcome back to the Dividend Diplomats YouTube channel. You got Bert and Lanny, the DD, the tag team champs, the dividend champions of the world. The Bert, the Hurt Locker, the Lanny, El Rizzle, the new age dividend investors.
Let's go, everybody. That is what it's all about. And today's video is going to be pretty exciting here. Lanny's portfolio has some shaking and some baking going in there. We're going to talk to you about the moves that Lanny made with one REIT that was acquired and what the heck he did with the capital from that acquisition.
You guys remember back in the fourth quarter last year, STOR Capital, ticker symbol STOR. There was a big merger announcement. I think I was during, I forget which exact month it was. But there's been a merger. STOR Capital has been bought out essentially by Oak Street, which is a division of Blue Owl.
Yeah, and what's funny, everyone thinks acquisitions could be great, right? Because you're like, I'm going to get some nice capital on there, and get some nice appreciation, which sure is fantastic. But it's also a double-edged sword for dividend investors like ourselves that are trying to build that dividend income stream, especially when you have a pretty decently yielding stock like STOR Capital, because now you have to replace that dividend income that you were getting from STOR Capital. That's
that's the nutcracker right there, guys. And Warren Buffett also owns STOR Capital, so he had a big conundrum on his hands as well.
Yes, and I mean, it's great, and we're going to get the comment, well, you benefit from the appreciation. Sure, of course you benefited from the appreciation, but
a little bit,
yeah, but it's the income. We're building that passive income stream to cover our expenses so we can reach financial freedom. We have to cover some expenses now. So Lanny, let's talk about this. Let's talk about what your strategy and what your mindset was going into how you wanted to replace it. And then let's reveal to all the viewers how you actually replaced it. What was your thought process going into this decision?
So the merger closed on Friday the 3rd, give or take some days there. Overall, I actually had over $7,000, approximately $7,044 worth of STOR Capital at close.
So you got more than Buffett. You got more than Buffett, right?
A couple dollars more, actually. Buffett's pretty mad at me.
Yeah.
And I actually didn't move on from STOR because they never really hit that merger price of $32.25. It was kind of very frustrating. But either which way, that was generating about $359 for me at a yield of about 5.1%, which is kind of average for a REIT because, you pay slightly higher taxes, but they're supposed to pay out slightly higher dividends back as required. So that 5.1% off $359. So my first objective is I'm not going down in dividend income. I am at least keeping it at $359.
Yep.
So that was the first criteria, Bert.
Yeah, so let's see what that was. So 359 divided by 7,044, 5.09% yield. So you're targeting with an average yield on this replacement of at least 5.09%. So keep that in mind, everybody.
Now, I reviewed a bunch of REITs over the last few months. And then right when they were leading into that close, I was like, okay, it's time to really know what I'm moving the capital into. I wanted to keep capital in the REIT space on the equity side. Again, we all know that both Bert and we both invest in the Fundrise. But I wanted to keep it in a REIT stock. And we all own Realty Income, ticker symbol O. Most of us all own them in a retirement account as well. This is actually in my taxable account, so just an FYI. And I wanted to keep it in something similar to STOR, which was single tenant owned real estate. So I landed on what is the ticker symbol is BNL, and BNL is Broadstone Net Lease, which is also a single tenant owned real estate entity.
Beautiful.
There was about 5 others that I was looking at. This one's still kind of younger in its dividend phase, but I landed on them, and we'll talk about the metrics here in a little bit. But the only caveat is that the yield was actually over 6%.
Oh, what a problem for you to have, Lanny. That is such a tough problem.
Yeah.
So when you think about that, if you do a 1-for-1 investment, you're actually going to pick up yield on this investment. That's pretty cool. So well, this is new to me too. This BNL Broadstone's new to me. So just a quick, like to your point, Lanny, about them, they have 790 properties. They're in 44 states. They have 218 tenants. They're industrial, healthcare, restaurant, retail, office. So very diversified. You're not just going into one of those REITs that's all concentrated in one sector. Very nice. A very nice complement to STOR Capital. So it's a nice 1-for-1 replacement.
And because they were over 6%, I didn't want to use all of the capital on this REIT. Essentially, the way I did the math was, how many shares do I need to replace the $359 from STOR Capital? And that landed on around 328 shares of BNL. So I bought 328 shares of BNL.
Simple. I like it. Nice, decisive, quick move. You instantly replace the income with a similar REIT. So, okay, so let's go through this, Lanny. You had $7,044, right, from STOR. You were able to replace it with $5,782 invested into BNL. The math is a little bit off here, Lanny, because if based on my calculations, I'm seeing you have $1,261.36 left over, right? I'm not missing this.
Oh, it's true. It's damn true.
So I'm guessing you're just putting this into cash. You're not really doing anything with this money. You might just be.
Yeah, I could earn probably over 4.5 almost percent on that if I wanted to.
You're probably buying some Pokemon cards because we've been we're getting ready. We've done some nice PSA submission. We're getting ready to open it. We've been posting some fun, stupid little shorts about it, just putting through there. I'm guessing you just didn't do anything with this $1,261, Lanny, right? Please tell us.
Guys, I put actually, and what I did is I ended up doing about $1,170 of that remaining. So there's actually still 90 something dollars I haven't touched yet. And I deployed that amongst my Vanguard trifecta, you betcha. I put money into VYM, VIG, and VOO. Essentially, I did it on the allocation that I do on a daily/weekly basis.
Easy.
So VYM got $360, VIG got $270, and then VOO got another $540.
Beautiful. So let's talk about that from an income perspective. That's adding another $24.28 of annual dividend income right there. So let's take a step back with it. Now that you put it in that Vanguard trifecta, you betcha. In total, after deploying with $90 left over, you lost $359 with STOR Capital getting acquired. You instantly replaced that with BNL. You actually picked up $1.80 there with that, buying those 328 shares. That added 360 income, and then you just put it in that trifecta, you betcha, which added $24.28. So Lanny, with all of you invested, you've actually picked up $26.08 of new dividend income from these moves.
Yeah, there it is, guys. And I still have a little bit over $90 still left to invest. So in total, I lost $359, but then I added about $385-ish in forward income on this, allocated a good chunk of it, 1/7 of it into the Vanguard ETFs, the rest into, the broad, net lease, entity right there. So Broadstone, again, is now a large position in my portfolio. Ticker symbol's BNL. Bert, you want to quickly look at the BNL metrics?
Yeah, absolutely. We just skipped right past that, didn't we? I think that's my bad. I think I was the one that just pivoted away from that.
No, and I'll quickly run through them, guys. How about that? Ticker symbol's BNL, and at the time of my average purchase was $17.63. The adjusted funds from operations, which is the equivalent of the earnings per share when you evaluate REITs, was $1.39 projected for the year. The price to AFFO ratio is about 12.68. They pay a 27.5 cent per share per quarter dividend, so $1.10 per year. So that, payout ratio on the AFFO is approximately 79%, which is pretty reasonable for a REIT, right?
Yeah, that's very solid. It lines up very well with some of the best, and it's not some payout ratios. You run the risk with REITs that are yields of 9%. A lot of people chase those, but then you run into the payout ratios that just don't give you a lot of wiggle room. So it's nice to find one yielding 6% that still has 20% ceiling on that payout ratio when you calculate the AFFO. It's a very nice find.
Thanks, Bert. And, with dividend growth, again, not that much history. I started paying it, I think, in 20 or 21. They've increased it kind of almost like half cent to 1 cent every couple of quarters. So, in Q2 of 21, they were at 25 cents. Now they're at, 27.5 cents. So over that time period, about, between 4.5 and a 5% growth rate at this point, which is pretty high for a dividend yielding company that's over 6%.
It's beautiful. Absolutely love it. It's a great REIT. It's a fantastic find. So everybody, let us know now that you've heard a little bit more about BNL. You've learned about how Lanny's reinvesting his capital, how he actually picked up income in this move, and how he's actually benefiting from a STOR capital acquisition and getting more income from it. That's the craziest thing from this story. Let us know in the comment section. What are your thoughts about this move? Also, too, this was Lanny's strategy to redeploy the STOR capital funds. He wasn't the only STOR capital shareholder. Him and Buffett weren't the only two. A lot of you held STOR capital as well. So let us know in the comment section what you did to replace that income you lost when STOR capital was acquired.
Hey guys, appreciate the support. Like the video, subscribe to the channel. Again, added a net positive $26 in forward passive income stream. Curious on the feedback on what you guys also did with your STOR capital proceeds. If you're in with us, you're against us, guys. And that was Bert and Lanny from the Dividend Diplomats. Over and out.